Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. GDP numbers have come in much lower than expected by some at 5.3% against 5.7%, thanks to a combination of factors including low kharif harvest, sluggish manufacturing and moderation in government spend. Let's understand these a little better with our guests now. Shankkar, Aiyar, a well-known journalist and also economist, DK Joshi, Chief Economist at CRISIL, and Shubhada, Chief Economist at Yes Bank. Thank you all for joining us. Shubhada, let me begin with you. The numbers were in some ways expected, and I think the market was also primed for it. And yet, it's a bit of a shock.
Not really. We were quite anticipating a 5.2%. So while the internal adjustments would have been on an upside and a downside, particularly on electricity and agriculture, but the headline number is pretty much in line with expectations. We were all broadly anticipating that it would be difficult to replicate a 5.7 in the ensuing quarters.
Why is that?
Which is exactly what has happened, because one, the momentum had been losing. Agriculture was going to be a bit under question because of the patchy monsoon. We also were likely to see a manufacturing slowdown getting reflected. Exports had been slowing down. So all of these were expected to reflect in softer GDP numbers for the second quarter.
Right. So if I were to take what she's saying, DK Joshi, this is not looking like a good picture at all.
Well, I think depends on, the issue is you are going to rise, GDP is going to rise in the next few quarters. And I think this quarter was anticipated to be bad because rains had failed. And second, we already knew that industry was not doing well because industrial data for the second quarter was already available with us. So I think it was more or less clear that this quarter is going to disappoint. I think the most disappointing element overall is the poor performance of manufacturing. And I think inability of manufacturing to lift. I think even after several quarters of weak growth, I think that is very disappointing.
And that in turn is obviously linked to consumer demand.
It is linked to consumer demand and partly also linked to some of the bottlenecks like mining, etc. Because for instance, take the example of commercial vehicles. If mining activity picks up, you'll see commercial vehicle also demand also pick up. But for other automobiles, yes, I think, and many other durables, which are actually very weak right now.
The larger question obviously is in contrast to the expectations that we had from what the economy would do. I mean, the number is not so relevant. Is this a disappointment or not?
Well, I think we are in for a slow rise in GDP. I think that's becoming pretty much clear. I think reason is also very clear because you can't put the economy on steroids. That is when you have the GDP pumping up quickly, cut interest rates deeply and increase fiscal deficit. But if you do that, then you are in for some other trouble in some other area. I think so. Structural measures which government is trying to take are always slow in reviving the economy.
Okay, and I'm going to come to Shankkar about how this whole thing looks and appears from a political economy point of view. But before that, Shubhada, also because there was a sense that oil prices are coming down, commodity prices are coming down, things seem to be lining up. I mean, the stars seem to be lining up. But is this a sign that they are not, or that we have some while to go?
I would think it would be a bit early and premature to expect quick turnaround because oil prices have been trending lower, no doubt, over the last 2 or 3 months. But the sharper cuts have come very recently. More importantly, I think it's not just the consumer demand. I think the bigger concern has been India has not seen any meaningful recovery in investments. And that is going to be slow in coming by on board. At the moment, government's efforts are to make those unproductive investments productive by declogging the hurdles and so on. And greenfield investments we could expect maybe 12 months down the line. So capital formation has been a slower component. And as such, going forward, it's only the last quarter of the current fiscal year, we could see an improved traction in industrial activity. What it does is it improves the prospects going forward into the next fiscal year. This year, we are still anticipating a 5.4%.
So Shankkar, how does this now look? I mean, what is this? How does this appear? Is it appear? I mean, as a sort of blip in the journey to good times, or?
Well, good news or bad news, अच्छे दिन और बुरे दिन, largely a function of expectation relative to what your expectation was.
Right.
So the fear was that a bad monsoon, drought and all would affect agriculture, which has not happened. The other set of expectation was that Modi Sarkar would revive investment, consumption, demand. That also has not happened. So if you look at the idea of make in India, manufacturing hasn't moved at all. But does the number 5.3 look good? Yes, of course it looks good if you contrast it with what we saw in the last quarter of the UPA government. So 5.7 was election stimulus and various things. The only time when redistribution or the trickle-down effect is visible in India is during elections. So 5.7
I like
had
the use of that phrase, but anyway, it means many things. But anyway, go ahead.
So going ahead, the big challenge for the government would be to meet its declared fiscal deficit number. And this budget, if you remember, had forecast a 20% or so, 18-point-some% growth in revenues. Actual revenue growth has been barely around 5 to 6%. People hoped in terms of expectations was quick decisions. That is not visible, neither on the power front, nor on the coal mining front, nor on the bottleneck front. The Government of India Finance Ministry writing to banks about 18 lakh crore worth of investment still stalled is in itself a story there.
Right. Okay. So we're going to come to the bank part in a little bit. Let me come back to you, Shubhada. So if you were to look at the components of GDP growth, what is the? I mean, and we did touch upon agriculture and manufacturing. What are the two areas of concern, and what are if any, the two areas that give you some hope?
Well, the obvious concern is going to be on manufacturing. I mean, what Shankkar said, make in India needs to become a reality. It's a vision, but it needs to become a reality. So before that, you need to solve a lot of issues, resolve a lot of problems, land acquisition, labor reforms.
And that's why, so this also is like a stock taking. I mean, a good time to stock take and say, okay,
I only have a slight different view, take that when an economy has seen 2 years of serious loss of momentum, it is difficult to imagine any government to turn it around in just 5 to 6 months. The first year or two have to be spent on repair and mend, fix the plumbing, and then
are you seeing the signs of those?
I would think there are innumerable steps that the government has taken. They are not big bang. We definitely believe that they are no big bang yet, but they have been small, meaningful steps, which over a period of time, over a quarter or two, will begin to unfold. So definitely the first concern is manufacturing slowdown. I would think as fiscal deficit becomes a larger concern going forward, to that I have a point to add that so far we have seen, because of economic activity, tax revenues really being very, very tepid. But what we haven't yet seen is the big ticket disinvestment revenue streams yet coming on board, and which we believe now between October and December there would be a fair amount of improvement there.
Okay, so if Mr. Joshi, we were looking at this also as a quick period of small stock taking on the economy, and a somewhat weak number is always a good occasion to do it. What are the lights that are flashing at you from the panel?
Well, I think we were talking about Make in India for manufacturing. I think that's a laudable goal, which is taking manufacturing to 25% of GDP, which means manufacturing growing at least 1.5 times faster than overall GDP growth. I think the concern right now is it's trailing the overall GDP growth, and I think first we have to take it to that level, and I think that is taking time. I mean, that to me is a big worry, because of demographics and other things. The employment creation will be very weak unless manufacturing activity picks up.
What about services?
Services, I think, has its momentum, but it is also linked to manufacturing, because the services themselves are getting industry intensive. I mean, for industrial production, you require more services now. I think that's clearly the trend available. So the weak industry also spills over to services. But I think the external momentum to services would still be there, I think, from the IT ideas.
And if we were to look at these numbers and the ones that may come next quarter in the context of what you have been projecting as CRISIL for the year, and the next one up till 2016, where is it all in line with what you had?
Absolutely, because we are talking of 5.5% growth.
Average,
first
for 5 years,
5.5 for this 2014-15. So the first half would be somewhere a little lower than that, and I think similar number will come for the second half. That's what we expect. So we are in line for this. Next year, definitely we are expecting economy to be in the 6% zone, and our forecast is 6.3% as of now. Okay,
so things are looking a little better going ahead, but there still obviously is going to be a perception sort of viewpoint challenge in the near term. Shankkar?
Well, the first 5-6 months of this government has given us an idea of Modi Sarkar, which is driven right from the top, and there is this hectic activity, announcements and stuff. But often we tend to mistake motion for movement. So the motions are all there. But the big decisions, the big challenges are yet to be met.
Give me an example.
For instance, the power link, fuel linkage for the power projects. I don't see any sign on that what's happening. I mean, plus you have the additionality of the problem that has come because of the Supreme Court judgment. That's a separate story.
But that's getting fixed with the auctions which will happen in February.
Yes and no, we don't know how it's going to pan out. The other thing is, there was this whole thing about making manufacturing competitive. Now that demanded a certain set of challenges to be met, which is labor. So some part of it in terms of the number of firms being less than before is there. Then power tariffs, the reforms in the power sector probably are way, I mean, you know, there was an expectation that if Suresh Prabhu took over, whatever you want to call that planning commission, the new animal, may find some way to fix it. I believe a paper has been submitted on that, no decisions. So unless you fix the SEB
broadly you're saying that
you have to be cost competitive, you have to be cost competitive, you have to be capital competitive, and you have to be technology competitive.
Right.
So these parts have to still come into play, and so
it will take a little longer.
It will take a little longer.
Okay, quickly, Shubhada, looking forward next quarter and beyond, what's your prognosis?
Our growth outlook is something quite similar, that we will grow somewhere around 5.3, 5.4 over the next 2 quarters. And therefore, for the full year, we are still looking at a 5.4 with some small marginal upside, but you know, that's not what our base case is.
Mr. Joshi, nothing to worry?
I think the oil is going to benefit us, and the benefit is going to be visible next year. And if we have a good monsoon next year, I think then we are definitely above 6%.
Okay, so good. So nothing much to worry, but some sort of elements of concern, as Shankkar pointed out. We need to go in for a break, but coming back after the break, we're going to talk about the new riskless capitalists, the statement that RBI Governor Raghuram Rajan made in Mumbai last week. Stay with us. Welcome back. You're with Policy Watch. Our second story this week is on the strong comments made by Reserve Bank Governor Raghuram Rajan about crony capitalism and rising loan defaults. Last week, Rajan accused some borrowers of enjoying riskless capitalism. He said such entities were making the credit of profile banks unhealthy, making a stark assessment. He said the bad debt write-offs by banks in the last 5 years alone would have paid off education for 15 lakh of the poorest children in the country, and that too in the top private universities. He said that banks recovered only 30,950 crores worth bad debts, so the debt recovery tribunals, though 236,600 crore rupees were claimed in all. Still with me in the studio to discuss this, Shankkar, Aiyar, DK Joshi and Shubhada Rao. Shankkar, let me begin with you on this, right? So this is an ongoing problem. The reason he seems to be saying it this time with greater force seems to suggest that it's not getting addressed in the way perhaps the Reserve Bank would like it to. Do you agree?
I think first and foremost, this is a recurring theme in Raghuram Rajan's sonata, that there are a set of entrepreneurs in India, there is crony capitalism and all. When he says riskless capital for capitalists, as the regulator of the central bank, of the governor of the central bank, it calls for a rear view look at the kind of banking that happens. How much risk are banks taking? So if I take this in 3 parts, we just discussed 18 lakh crore worth of projects are stalled. So who's taking the risk on that? It's the entrepreneurs. The government is not taking any risk. The banks are happy to roll over and write whatever is to be done. And who's doing it? Mostly public sector banks. So in any borrowing, lending and business activity, there are 3 entities: the entrepreneur, the policy that is formulated by the government of the day, and the banks. Now, to apportion all the blame on the entrepreneurs and capitalists and say that they should be given bread and cold water like it was in the 16th century or whatever, I think it's excessive.
Okay.
So some responsibility has to be taken.
Visual reference.
Yeah, I mean, it's visual reference or whatever. But the thrust of the argument that all entrepreneurs should pay for the losses of their businesses or whatever.
But the Reserve Bank does draw distinctions, right? It's saying that these are willful defaulters. These are not defaulters who are, this is not everyone who fails to repay a loan. So he's also not necessarily distinguishing between the small borrower and the big borrower. He says there are problems with both.
I want to give you examples of 3 different kinds of borrowers.
Okay. Shankkar, just hold your thought for that. Yeah, let's get some broader view first. Mr. Joshi, what's your sense? How bad is the NPA problem and what is the damage that it causes? I mean, we'll come to the other part later.
Well, I think NPA problem is quite serious in the sense that the known NPAs are over 4%, and I think the weak assets, if you include, I think the number will rise further. So there is definitely an issue, and at this juncture it becomes a bigger issue because unless you clean up the bank balance sheets, they can't aggressively finance growth. I mean, so which also requires the firms to some of the firms which are over leveraged, particularly in the infrastructure space, to deleverage. So I think all this is growth constraining.
Is it your point that banks in general are short of capital, which is one part of the problem, or are they short of the capital because it's all tied up in non-performing assets?
I think particularly true of public sector banks. The private sector banks are still relatively in a better position. The NPA levels are higher in the public sector banks. I think so it does constrain their ability. And in India, the investment is generally bank financed. I mean, we don't have such vibrant bond markets. So I think when bank financing gets constrained because of its bad assets, then I think you can't aggressively finance.
So let me ask the larger question to you, Shubhada. To what extent can or should or will banks be needed to fill the gap in the overall infrastructure and larger project investment pipeline that we have in this country?
Well, I think first and foremost, the Reserve Bank of India not so long ago did allow banks, because we all know banks are the largest intermediaries. So they did allow banks to issue the bonds, to be able to finance infrastructure and raise infrastructure bonds. I think that's a great move because insofar as, other parts of the credit markets are not very vibrant, banks will need to be the key channel to finance these larger projects. Definitely, there is a distinction between the public sector banking space and the private sector banks. We have already, seen a discussion just now that typically there is a certain degree of interference. It has its impact on, some credits being forced, and as a result of, as I said, last 2 or 3 years being a kind of policy environment being in limbo, even if there is a due diligence done, but if certain policies have not taken off, those assets which per se were not actually bad have rendered bad. It's not the banking sector's fault, it is the policy environment fault. So we need to know whether they are productive assets or they are just to be written off assets. I think that distinction needs to be made. And Governor himself, quite some time ago had said that it's very important to make that distinction. It's therefore going to be a critical issue that capitalization, in addition to Basel III norms, etc. All these will become a larger points of discussion going forward.
Shankkar, so let me come back to you very quickly. The term that he used, the governor, he says the sanctity of the debt contract has eroded, which is a larger statement or an observation. It's not saying that he's a crook or she is a crook and everyone has run away with the money. He's saying that the sanctity has eroded.
And the sanctity of rule of law has been eroded and the sanctity of governance has been eroded. See, the problem happens in large number in the public sector banks, because public sector banks are forced to lend to infrastructure because the government of the day wants to build infrastructure. Public sector banks are forced to lend to borrowers who are not credit worthy because of their political connection. And then you have the big picture issue of the policies being in limbo. So what does one do about that? It's a three-cornered thing. I mean, it's a prismatic.
And the Reserve Bank Governor is talking about, making the whole judicial system more responsive, the banks themselves more responsive, as in move to fix the problem quickly rather than, let the asset die. Mr. Joshi, what is the kind of challenge that we are talking about in numbers? I mean, suppose we say as a country we want to grow to double digits at some point, someday. We need a lot of capital, right? What is the gap that we need to fix or find ways of fixing?
Well, I think we have been seeing various estimates. It used to be 1 trillion worth of infra investment. Actually, I think we got less than 500 billion. So I think it's not about how much money you are pumping in. Right now, it's the issue of whether that money that you have pumped into investments, whether it is yielding results or not. If infrastructure projects are stuck, and I think then it's good money, I think, going for bad. I mean, so obviously, I think you have to improve the ICOR, as to put it technically, the efficiency of existing investment first. I think then pave way for further investments. I think the existing investments are, look at power plants for example. I mean, if they are operating at 60% PLF, their IRRs go for a toss. So I think so you have to address that issue. I think so putting up new power plants is not a solution there.
Okay. So Shankkar, as we go forward, now the solutions are somewhat clear. What is the one missing factor or the couple of missing factors which will ensure that things move faster, at least in future, now that everyone is focused on it?
Well, the first primary thing would be to relook at the idea of what constitutes public-private partnership worthy investments and what constitutes where the government itself should fund. So we take away the conspiracy angle from here. The second part is to make your judicial system deliver. And the third part, DK spoke about ICOR. Government of India, its banker is the Reserve Bank of India, it floats bonds and Government of India spends. Who is to now pin down the government as to how efficient their spending is in the social sector programs that it does? So you need to find an absolutely valid, efficient, viable ICOR for the economy itself. And that would start at many places. And so I think the judicial accountability, the governance accountability, and then the business accountability.
Right. And obviously we've got, we've got some consensus that something needs to be done and has to be done fast.
Absolutely, it's an issue.
Right.
There's no denying that.
Okay. And we need to treat it with some urgency. I think that we have consensus on. Okay. We need to go in for a break, but on the other side of the break, we ask about the SAARC economic linkages. Is it a dream or is it something that can become a real economic reality? Stay with us. You're with Policy Watch. Welcome back. Here with Policy Watch. 8 member nations of the South Asian Association for Regional Cooperation, or SAARC, reached an agreement to boost cooperation in the power sector in the region at a summit meeting of the group in Kathmandu. A deadline of 3 months has been set to finalize the agreement, as Pakistan said it was yet to complete the internal work on this. The Framework Energy Pact will enable cooperation in the power sector amongst the 8 member countries and facilitate integrated operation of the regional power grid. The group is the 3rd largest economic entity in terms of purchasing power parity after the US and China, but inter-country trade is very low, namely due to differences between India and Pakistan. Prime Minister Narendra Modi highlighted the difficulties in intra-region trade while addressing the 18th SAARC meet in Nepal's capital Kathmandu. He said it was difficult or harder to travel within the region than to Bangkok and Singapore. Shankkar, let's begin with you. I know you've been following this very closely.
You see, the potential of SAARC is immense and has been repeated for the last 20 years, if I remember. I think it was first raised as an idea during Rajiv Gandhi's time, and then we have. So here's the picture. You have India, which is a $1.82 trillion economy, with almost 8 out of 10 people living in SAARC are living in India. So all the economic potential, the opportunities and all. Now look around India. Is resource-rich countries, Myanmar, Bangladesh, Nepal and Bhutan for hydro potential, and Pakistan, very understated but huge potential in agricultural productivity and as a market for goods from India. So if you look at the trade possibilities in this region, it's huge.
Okay.
But how do you build cooperation between countries which are all nursing old and imagined grievances and who have problems of governance? And that it wouldn't be too far or exaggerated to say that 3 out of those SAARC nations have repeatedly failed themselves and their own people.
Right.
So how do you build a cooperation around it?
The big
and
question.
That's the challenge.
So the Prime Minister said Indian companies are investing billions abroad, but less than 1% flows into our own region. He said this in Nepal. DK Joshi, what is the 1 or 2 things that we should focus on if we are to get more economic meaning out of this partnership?
Well, I think the trade is one, and I think if you compare this trading bloc with other trading blocs, the amount of trade that happens in this trading bloc is very, very small.
Yeah, $22 billion. I mean,
it's very small. It's about, I think, the intra-regional trade is not more than 5% of the total trade, which is lowest among all trading blocs. And I think that, I think you have to understand why that is not happening. I think It's not happening because of infrastructure issues, because I think because of several
as Shankkar said, it's also the political and other sort of
so I think everything
so
I think if and this is among the poorest regions. I mean, 25% of world's population lives here, but it accounts for only a little over 3% of world's GDP. So it is obviously, I think, per capita incomes are very low, and need to integrate with each other is massive.
Right. So Shubhada, the one example that you want to quote to make SAARC work.
I would like to take it at a broader perspective, if I may. You know, it's always that in international relations, those relations have thrived and survived far more, which have been driven primarily by economics and not politics. What do I mean by that? That it's economic underpinnings which drive the partnerships in the country, and not just assuming a regional political leadership without any economics in the foray. That would not survive. Clearly, Prime Minister is following the example that economics ought to drive the politics or bilateral relations, and this is exactly what we have seen since the time he took over as a Prime Minister. We have seen innumerable international collaborations, starting with where you are being most starved of capital, infrastructure. He has tied up with deals with Japan and so on, where, you know, energy is a big concern in the very near term. He went ahead and made trips to Nepal, have had hydel power generation. So basically, the short point I would like to make is that, as Shankkar was saying, there's a huge potential of economic leveraging through its neighbors, and that's exactly what the Prime Minister is aspiring to get at.
Right. So let's quick sum up. One point. What is the one thing that we should focus on in the next year if we are to make this whole economic block work?
I think we have to focus on trade.
Okay.
I think because there's so much of people living in this, but I think one should remember that India is a large part of this this whole thing.
Yeah.
And if you take India out, the rest of the SAARC looks very small.
Okay.
So India has to play a more proactive role.
Okay. Shankkar?
I think there's a huge potential for two kinds of markets. One is the resource market, which is the minerals, the hydro potential and stuff. The other is the human market. I mean, India can train and India can build for the SAARC nations many of the facilities that they are unable to do. And in doing that, you will create a market.
Government or private sector? Because private sector is the one which is iffy in some ways.
Well, private sector has to lead it because it will be cleared of all the political issues that are. But the cooperation has to be built at the leadership level. So if you agree that India can supply power to Pakistan, or India can build power plants in Nepal and in Bhutan, or India can build a gas pipeline between Bangladesh and India, or India can open up its markets for goods produced in those countries. You have to make the first move. America made the first move for NAFTA to be a success.
Right. Okay. So that's a good example, and that's where we should be taking the lead if we are to make this economic dream become a reality. That's all we have time for, and we've run out of time completely. Thank you so much. We'll be back on Policy Watch next week, same time. Thanks for watching.